Good morning, good afternoon, and good evening to everybody. My name is Ben Dickinson, and I run the Global Relations and Development Division at the OECD, and it's my pleasure to introduce you to this final tax and development session. I hope you have enjoyed and benefited from the 12 sessions that we have been running over 2 days. This final session is intended to do something a little bit different. We're trying to look ahead to the next decade and possibly beyond to consider what the tax and development challenges and opportunities will be for the future. And we're going to do that through a panel discussion, which Marlene Parker, the co-chair of the Inclusive Framework, will guide us through in 1 second. Just a couple of additional housekeeping points. Please use the interpretation buttons at the bottom of the screen, and I'm sure you will have questions for the speakers as they proceed. So please put your questions to individual speakers in the chat as usual. Or if you want to comment or ask a question to anybody else, then please do so. I'll come back to you at the end of the session to say farewell. But in the meantime, it's my pleasure to hand you over to Marlene Parker, who will guide us through this session. The floor is yours, Marlene.
Thank you very much, Ben. There's an echo. Okay. So thank you very much, Ben, and welcome everyone to this plenary session. And I greet you well wherever you are in the world and whatever time of day it is in your part of the globe. I am Marlene Nemhard Parker, co-chair of the Inclusive Framework on BEPS, and it is my great pleasure to chair this session, especially for those of us involved in the technical work of the Inclusive Framework. We can get very blinkered and assume that the negotiations on corporate tax, and particularly the work on digitalization, are the most important issues on tax. So I am pleased to have an excellent panel here today to encourage us to think more broadly about what the future may hold for those of us who work on tax and development. And so joining me today are Chetan Rao, and I'm going to be introducing our 5 panelists to you, and I'll start with Chetan. And he is a director of the Foreign Tax and Tax Research Division of the Indian Revenue Service, where his work includes responsibility for tax treaty negotiations. He is part of the Indian team negotiations on the two-pillar solution and was recently nominated as vice chair of the task force on the digital economy. He was also involved in delivering the Indian G20 presidency. And congratulations to India, Chetan. Next, we have Alexandra Haas, who is the executive director of Oxfam Mexico. And she has dedicated her career to the construction and implementation of legislative and public policy initiatives with human rights perspectives, working for international organizations, governmental institutions, and social organizations in Mexico, the United States, Guatemala, and Argentina. She served as the president for the National Board for the Prevention of Discrimination during 2015 to 2019. And prior to that, she headed the Political Affairs Office of the Mexican Embassy in Washington, D.C. We also have Ambassador Amélie du Montchalin.
Amélie du Montchalin here. Indeed, hello.
Hello, Ambassador. And you took up your duties as permanent representative of France to the OECD in Paris on the 30th of November, 2022. She joined the French government in March 2019 as Deputy Minister for European Affairs, leading the negotiations on Brexit and preparatory negotiations for the French presidency of the Council of the European Union. She became Minister for Public Service and Public Sector Reform in July 2020, where she led the reform of the senior civil service and the transformation of public services in the face of COVID and its consequences. She was appointed Minister for the Environment in May 2022 until leaving the French government in July of 2022. Also joining us is Troa Skedvin, and she's head of the Unit for Global Sustainable Economic Development at SIDA, which is a Swedish International Development Agency. Troa has more than 20 years experience of development cooperation. She was acting chief economist at SIDA from 2016 to 2017. Troa most recently worked as acting head of cooperation and lead economist at the Swedish Embassy in Dar es Salaam for 4 years, and she has previously worked as senior economist at the Swedish embassies in Nairobi and Lusaka. Troa has worked extensively on macroeconomic analysis, different aspects of public financial management, social protection, among other aspects of economic development. And finally, we have Samira Khan, who is head of the Country Programs Unit since 2017 and the interim head of the Rapid Response Unit at the African Tax Administration Forum, ATAF. Samira both provides directly and oversees the delivery of technical assistance requested by ATAF members, either through customized long-term country programs or short-term programs focusing on different areas such as transfer pricing, exchange of information, domestic taxes, tax administration, assistance programs, amongst others. In her current role, she has expanded technical assistance delivery in various areas of tax administration and tax policy to 27 African countries. Before joining ATAF, Samira was at the South African Revenue Service. So colleagues, depth and breadth and the level of expertise is undoubtable. And so I'm going to start off with Shatan. So Shatan, G20 has been active on tax and development issues for a number of years. How has this evolved? And how will this evolve further under the Indian presidency? And what do you hope to see from the G20 in future years?
Thank you, Marlene, and thank you, Ben. I hope I'm audible. A very
Yes,
good
you are.
morning. Yeah, thank you. A very good morning, good afternoon, and a good evening to all, and greeting to my fellow panelists. At the onset, I would like to thank the OECD for inviting me to address this forum on the occasion of Tax and Development Day, especially at a time when India has assumed the presidency of G20. It is an opportune time to evaluate the evolution of tax and development agenda and identify the most pertinent priorities going forward. Tax revenue are a critical component of resource mobilization efforts in the developing countries. And in the recent years, the G20 leaders have declared their commitment to support developing countries in strengthening their tax capacities, given its implications for fiscal management. In order to build sustainable tax revenue bases, it is recognized that developing countries require targeted and intensive assistance for capacity building, and the communique of the second Finance Minister and Central Bank Governors meeting, which was held in April 2021, recognized this important pillar within the tax and the development stream. A report was prepared in 2021, and the G20 took a note of this report in its Leaders' Declaration in October 2021. This report places its focus on investing in support to lower capacity countries through a range of modalities, including political dialogue, outreach, induction programs, bilateral capacity building, and Tax Inspectors Without Borders initiative. This support has had a significant impact, with many countries able to benefit or benefit more from the new international tax architecture. The support of developing countries becomes all more pertinent in light of the work of the G20 OECD inclusive framework to address the tax challenges arising from the digitalization of economy. It is the endeavor, and it must be the endeavor of G20 countries to make the rules of two-pillar solutions that are simple. This comes with a disclaimer that nothing is simple in tax, but as much simple as possible and easy to administer. During the Indonesian presidency in 2022, the G20 members asked the OECD to identify possible areas where domestic resource mobilization efforts could be further supported. The outcome was the follow-up report titled the G20 OECD Roadmap for Developing Countries on International Taxation, which was presented in the FMCBG meeting of G20 in October 2022. This roadmap laid some very important key principles for the interested G20 members, other stakeholders, and development partners, which included providing support to developing countries to assess the potential benefits of implementing the remaining BEPS action, facilitate faster progress on securing developing country access to CBCR, putting in place the resources and expertise to provide the additional capacity building needed to implement the two-pillar solution, and also to commission further work to assess opportunities for tax policy to support the achievement of the Sustainable Development Goals. India assumed the G20 presidency on 1st December 2022 for a period of 1 year, and the theme of India's G20 presidency is Vasundharaiva Kutumbam. What it means is it is that the whole world is a family, and the logo symbolizes and the motto symbolizes one earth, one family, one future. As stated by the Indian Prime Minister at the Bali summit in November, we would like our G20 presidency to address the challenges before us in an inclusive, ambitious, action-oriented, and decisive manner. The tax and development agenda continues to be an important priority under the G20 presidency. We thank Indonesia for the timely taking up the tax and development agenda forward during their presidency. The complex multi-layered changes that are being proposed within the two-pillar solution will require all the inclusive framework jurisdictions to strategize capacity building for their tax administration. The designs of the two-pillar solution warrant bespoke technical assistance, and especially given the fact that the implementation stage is approaching fast, and Indian presidency considered it essential that the need to develop the tax capacity related to the implementation of the two-pillar solution, and to develop documentation in the form of handbooks, technical guidance to aid effective implementation and administration of the two-pillar solution. Further, knowledge partnering of various multilateral organizations like OECD, Tax Inspectors Without Borders, Asian Development Bank, Platform for Collaboration of Tax, and others with diverse pool of expertise in international taxation would provide the much required impotence for building capacity of tax administrations, including in areas which goes much beyond the two pillars. The G20's efforts in tax transparency have been successful in reducing the offshore tax evasion, but there is potential to tap the progress made in tax transparency to address issues such as corruption, money laundering, and other financial crimes. With the crypto asset reporting framework, which has been recently released to ensure the visibility in respect of crypto asset transactions in foreign jurisdiction, tax administrations may have to guard against newer technologies, which could be used to circumvent the global standards that are being implemented. Further, detecting money laundering through real estate assets may require an enhanced global cooperation and information sharing on property transactions. Recognize this need for a collaborative response. The Indian presidency, with OECD as a knowledge partner, is organizing a high-level tax symposium on combating tax evasion, corruption, and money laundering in February, just one day ahead of the finance minister and central bank governors, to discuss strategies that can be developed for a coordinated response for fighting tax evasion, corruption, and money laundering. Further, the Indian presidency has also commenced the process of setting up a regional multilateral capacity building center for taxation and financial crime investigation in India to support these efforts, particularly in the South Asian region. And going forward, we hope that the G20 continues to prioritize tax and development agenda with a particular focus on the lower and middle income countries. The significant progress achieved in the international tax cooperation under the inclusive framework represents one of the achievements of G20 in the past decade. To ensure that the inclusive framework coalition remains strong and united, it's important that the G20 to monitor and support the progress of developing country members in implementing their priority BEPS action, as well as ensuring their active engagement in the inclusive framework work streams going forward, particularly in reference to the two-pillar solution, as the countries continue to finalize the technical design elements of Pillar 1 and completion of all components of Pillar 2. It is important for G20 to strive for participative engagement of all jurisdictions in negotiations. It is encouraging to note that the initiatives taken by the Task Force on Digital Economy to hold debrief sessions for delegates for developing and other lower capacity countries at the end of these countries in capacity building on the two-pillar solution is imperative, as this will enable the jurisdictions to effectively engage in negotiations of the multilateral convention and also help its acceptance and coordinated global adoption of the two-pillar solution. The G20 should not lose sight of the fact that for efficient and effective implementation, it is imperative that the rules are simple and administrable. Going forward, we hope that the G20 high-level symposium initiates a debate on the effective multilateral response required to counter tax evasion, corruption, and money laundering, and lays the groundwork for G20's further policy response to this global challenge. And as we prepare for a busy period for the G20 and the OECD in the coming months, we hope that more discussion and action will take place on some of the issues that have been highlighted today by the participants, and the G20 is able to collectively to ensure the development of a global tax architecture that is fair, inclusive, sustainable, with ample opportunities for developing jurisdictions to set and weigh in on the pressing issues of the day. With that, thank you very much.
Thank you very much, Shaitan. A lot there to unpack, and I'm sure that you'll have a lot of questions when we come to the question and answer session. I think developing countries would be very heartened by the focus of the Indian G20 presidency on the focus on capacity building, the roadmap, tax transparency, the multilateral center, all of this aimed, as you said, at one family, one future. And the takeaway are the what I imagine will become the mantra of the G20 presidency: inclusiveness, action-oriented and a decisive approach. So thank you very much. We now move to Alexandra. And Alexandra, a lot of the focus in recent years has been on corporate income tax, and more broadly on how much revenues are raised by corporate income tax. But do we need to look more broadly at other taxes and the distribution of taxation? What are your thoughts on that?
Thank you so much, Marlene. Thank you for facilitating this and for inviting us from Oxfam to speak at this event. Good morning, everyone. And let me just start by saying that the questions that we ask ourselves need to be seen in the light of the polycrisis that we're living right now. We, for the first time in 25 years, extreme wealth and extreme poverty have increased simultaneously. And those who are fueling such trends in extreme wealth concentration remain largely untaxed and sometimes even not taxed at all. So let's have a look at who has been profiting from the recent multiple crises. And we see that the richest 1% in the planet grabbed nearly 2/3 of all new wealth worth $42 trillion created since 2020, almost twice as much money as the bottom 99% of the world's population. More shocking is to see the acceleration in such trends. During the past decade, the richest 1% has captured around half of all new wealth. Over the past 2 years, billionaire fortunes have increased by 2.7 billion a day, and a billionaire gained roughly 1.7 million for every dollar of new global wealth earned by a person in the bottom 90%. In Mexico, my country, the super rich have seen their fortunes increase by 33% since the start of the pandemic. 21 out of 100 pesos of wealth created in Mexico between 2019 and 2021 went to the richest 1%. That's 21 out of 100, while only 40 cents went to the poorest 50%. However, taxpayers with yearly incomes above 500 million pesos barely contributed 0.03% of total tax collection in Mexico. Moreover, up until 2021, big companies are paying effective income tax rates of between 1% and 8% only, well below the 30% they should be paying. It's all of us who pay when the super rich don't. And this comes on top of a decade of historic gains, the number and wealth of billionaires having doubled over the last 10 years. So is there a limit to this super extreme wealth concentration? And the more worrying part is that this super wealth remains largely untaxed or untaxed at all. Only 4 cents in every dollar now comes from taxes on wealth. Since the previous financial crisis, and despite this trend in super wealth concentration, tax collection on wealth has basically not increased. Collection on corporate tax income is 10% lower now, and collection from households, either on labor or consumption, has increased around 50% as a percentage of GDP. Capital income or capital gains are taxed at an average of 18%, and half of the average marginal top taxes rates on wages. Only 3 countries in the world tax capital higher than wages. There's a clear bias taxation system to tax much more work and consumption than capital. So why is it that rich people's income mostly comes from their returns on their assets? Half of the world's billionaires live in countries with no inheritance tax for direct descendants. They will pass on $5 trillion tax-free treasure chest to their heirs, which is more than the GDP of Africa. And that is going to perpetuate inequalities and super wealth concentration at unacceptable levels. And we feel there's no reason to hide behind the lack of efficiency or the abuse of tax havens. We can change this tax system, but it needs to change as a whole. What would change if we did tax better? An annual wealth tax of up to 5% of the world's multi-millionaires and billionaires could raise $1.7 trillion a year. Imagine what we could do with that money. Lift 2 billion people out of poverty and fund the shortfall for every humanitarian appeal. We could deliver a 10-year plan to end hunger. We could support poor countries ravaged by climate chaos. We could deliver universal healthcare and social protection for everyone living in low and lower middle income countries. A similar tax in Latin America could help increase health investment by 36%. In Mexico, a federal tax on big fortunes could allow the government to collect yearly up to 270,000 million pesos. That could fund, for example, 40% raise in federal health spending, or raise by 17 the environmental protection federal spending. So some countries are taking a different path, like Colombia. Chile and Brazil have been discussing tax reforms with higher wealth taxes and being vocal on anti-tax avoidance rules. It is also exciting to see countries like Colombia want to go further. And in the case of Colombia, it's calling for the first Latin American Caribbean summit for inclusive, sustainable, and equitable global taxation, because a better and fairer system can only happen through coordinated action. And let me also add that from Oxfam and civil society, we are extremely supportive of this process that intends to give a real say to experts, academia, and citizens in shaping the tax future of the region. That is a positive example that we believe can be followed by others. Mexico should also be part of that conversation, and we want to socialize the fiscal discussion in the country to implement a strategy for both fiscal pedagogy and a strong evidence-based policy proposal. Let me add a final point on corporate taxation. It's true that the OECD has largely been focusing on international corporate taxation through the different BEPS and Pillar 1, Pillar 2 negotiations. The global corporate tax deal was meant to end tax competition and tax haven for good, but ended up written mainly by rich countries and large corporations. These corporations, especially corporations in energy, food, and pharmaceutical sectors, where monopolies are especially common, are posting record high profits, even as at least 1.7 billion workers now live in countries where inflation is outpacing wages. We have looked at 95 food and energy corporations that have more than doubled their profits in 2022. They made $306 billion in windfall profits, and the money paid out, $257 billion, 84% to rich shareholders. We're glad that the EU has agreed to levy windfall taxes on energy corporations' profits, but it's not only energy companies that are making excess profits. The pandemic has created 40 new pharma billionaires. This is not just a bonanza in corporate profits on an elite of companies. Excess corporate profits have driven at least half of inflation in Australia, in the US, and in the UK. Corporate income tax is not fit for purpose. It is time to reconsider the design, not only in front of the digitalization of the economy, but also considering the quasi-monopolies and companies with such excess profits that distort the rest of the economy. A corporate income tax for the 21st century, but under full acknowledgement of corporate behavior and largely dominant monopolies. We need permanent windfall taxes on excess corporate profits across all sectors, but it has to be discussed now. We can't waste time on wasteful discussions every time there is a crisis and every time there is profiteering. In short, for us, taxing the wealthiest needs to be the new big agenda with a broad approach. Of course, higher taxes on the top of income levels, a comprehensive net wealth tax, increasing taxation on capital gains and capital income, and introducing inheritance taxes, and rethinking how to tax excess profits. Above all, we want to see a shift in response from global institutions and from governments, a reckoning that more of the same, more billionaire wealth, and a deep plunge into a cost of survival crisis is the definition of more suffering for billions. We need to listen to what ordinary people are calling for around the world. It is possible. It is a policy choice. Thank you.
Thank you. Okay, thank you very much, Alexandra. Very interesting, thought-provoking comments on what has been a perennial source of concern. The inequality, how do we actually bring about a more equitable tax system in countries where you have, as you say, the top 1% controlling the majority of the wealth, the bottom 90% being taxed more on households, and for putting forward ideas on how wealth tax could be dealt with. We're talking about development in this discussion, and the fact that the super wealthy and the inability to be able to tax the super wealthy, and what that leads to in terms of hunger, the implications for healthcare and poverty, and does it really undermine sustainability? Windfall taxes you mentioned as a possible solution. And I think the takeaway from your presentation is that taxing the wealthy is, these are my words now, impatient of not only debate, but also impatient of urgent implementation. So the fierce urgency of now. Okay, so thank you very much. We will have several questions and thoughts, I'm sure, on that as we move along. I now come to Ambassador Monchelon. And I'm going to ask you, taxes is one part of the broader financing for development landscape, where already big challenges on debt and climate financing are growing. With France planning a summit on financing for development this year, what role do you see for tax in financing for development, especially in relation to the climate crisis?
Good afternoon to all. I think I will speak in French, and there is some interpretation, not because I don't speak English, as you see, but because we try to promote bilingualism and make sure that the beautiful language of French, which is the second official language of OECD, is practiced. So if you need, I think there is a translation possible. Donc, je passe au français pour vous dire en quelques mots la manière dont mon pays voit ce sujet de la fiscalité et du développement en cette année 2023 qui est effectivement assez particulière puisque nous sortons d'une période de crise à la fois du Covid, mais aussi plus récemment.
En esta época, in these times of COVID and the post-pandemic crisis, and most specifically, there's an energy crisis.
Okay, so just a moment, Ambassador. I think the interpreters are just now getting in.
Can you hear
so
us?
I'm just going to ask you to start over because we missed the first part of your presentation.
Please, Madam Ambassador, can you continue because we missed out on the first minutes? Sure, I will restart, and I would like to take this opportunity to thank the interpreters for their work. I'll be clear and very precise. The foundation on which development has arisen over these years arose to a 140 billion rate in 2022. We're glad about this, but we also estimate that at least the United Nations estimates that 2 billion are required, 10 times more to fund the SDGs in the 2030 agenda, and 2 billion extra additional are required for developing countries' environmental and climate funding. The Ukraine needs to be reconstructed as well, and around 1 billion is yet another estimation for Ukraine because the Ukraine is a country that needs this assistance. So we need to multiply times 25 public assistance in order to attain and to meet everybody's goals and needs. This is basically real. So more methods need to be developed to fund development and the climate crisis. Therefore, the summit that will take place in June in France will take into account all these topics, just as our colleague from Barbados just mentioned. other countries should also take part. We recently heard from the Mexican experience, but there are more countries that can also take part in the development. Hence, the first point is that development has never been so expensive. And secondly, the main source of development, of funding that should be developed are national taxes. The OECD recently issued a paper reporting these numbers. In average, taxes account for 34% of the GDP. In Latin America, they account for only 22%. In Africa, they account for 16% of the GDP. If we focus on the oil and gas African countries, it falls to 5% of the GDP and 8% in the Equatorial Guinea, which means that the main source of development for development and climate change involves how capable states are to collect taxes to those major players, the major businesses operating in their territories, namely energy and mines. For France, it led us to set two main goals. First of all, efficient, egalitarian, and attractive tax policies for the southern countries. And secondly, the modernization of tax administration, which is work that you do, and you know exactly what I'm talking about, because it's a lot. What taxes can the developing countries add? And I do not mean that the northern countries shouldn't continue to increase their tax prices or rates. We're not going to do that, but we will not achieve that if we do not mobilize domestic resources. In recent years, the VAT, it is an indirect tax, is an easy to expand income. It covers all the sectors, the informal sectors too, without impact on the production sector. The second point to take into account is focused on world trade. Most companies reduce the customs tariffs, but as flows increased, at the end of the day, tax collection could be magnified. Another element involves defining the tax policy. And the second element is how to work on recovery, because we need very specific tax rules. So we need to work on developing local tax administrations. Bilaterally, France allocated 2 million euros to support tax recovery, tax policies, and we also share the criminal code that was launched in 2021 during the African Economy Summit, which assisted us in enhancing collaboration with African countries, fighting corruption and money laundering. We have therefore carried out workshops in 16 French-speaking countries. The Commission will be permanently installed in Dakar as of 2023. The second program we actively support is the collaboration between UNDP and OECD, where we work with the organization specifically Without Borders. Thanks to this program, we have also benefited from the involvement of further African countries. The benefits are that the OECD has implemented 2 pillars to address digitalization and multinational companies. Nonetheless, this is not a North-North agreement, but it's an international inclusive program. The second pillar will allow us to break down into northern and southern countries based upon the actual digital activities. The estimation is that over $20 billion will be distributed in the markets and in those markets with major players operating in their territories, but without tax payment. The two-pillar based program implies that there's much to do to fight the illegal economy. The OECD just reported that in sub-Saharan Africa, when a barrel of oil is sold at $100 internationally, only 22% goes back to the domestic authorities, to the tax collection authorities. And of course, there's further investment, but there's much corruption too. This is a cross-sectional tax challenge. So if this tax is implemented in the developing countries, we will see excess in financing that will surpass national development, and development funded by other countries is irrespectful of democracy, national decisions, and the local social society, civil society. So we must fight informality, corruption, and tax evasion, tax havens. This is why we have the two-pillar solution, as well as revenues that may come by incorporating the informal economy. We're talking about $50 million annually. Tax collection, as we know, may increase the national public development. This is a challenge to mobilize national resources. This is paramount. This is a priority. Therefore, we need to address the challenges posed by debt, multilaterality, and how to keep flows going, how to keep flows coming. So development cannot only be funded by foreign countries. Thank you very much.
Thank you very much, Ambassador. So efficiency, equality in terms of administration of our tax systems, modernization, good tax policies, as well as trade, refining the policy development process, and also leveraging some of the programs that we already have, such as the TIWB, the two-pillar solution, and we must continue the fight against informality, corruption, and the tax evasion. So those are your perspectives in terms of how we can deal with the development agenda. Thank you very much for sharing that. I now move on to TRUA. And TRUA donors have a vital role to play in supporting countries as they look to reform tax systems. How do you see the role of donors evolving in the coming years, especially in respect to issues which cover both tax and the spending, such as increasing social protection?
Well, good morning, good afternoon, and good evening. I hope that you can hear me.
Yes, we can.
Thank
Or
you.
I can.
Thank you. And thank you very much for the opportunity to participate in this important discussion. And I have already enjoyed the interventions from the panel members. And even though there are different perspectives that are brought forward, and congratulations to the organizers for putting together a diverse panel. I can also already hear commonalities between the different panel members, and also you will hear that now in my contribution. So tax and spending has been, is currently, and will always be at the center of the core conditions for sustainable and inclusive economic development. We are now in a multiple crisis situation, sorry, with the consequences that we have a combination of even more shrinking fiscal space and increasing debt levels. And at the same time, we have even more increasing needs for basic public services, such as health, education, social protection, etc. And this implies, of course, that tax and public spending is even more important. And the situation is critical, especially in low and lower middle income countries. The low coverage also of social protection and the lack of financing has really been revealed with the consequences of the pandemic. The ILO estimates that to finance universal social protection floors, the average low-income country requires additional funding in the order of 16% of GDP. So in this situation and with this development, how do we see the role of donors evolving in the coming years? Well, I'm sure there are many things that one could mention, and one important thing is just the increased commitment, I think, to the tax issue, and especially to the Addis tax initiative and to the whole Addis agenda. So it was great to hear the ambassador's contribution earlier and the coming forum. But I wanted to mention three themes that goes for donors, but also partly for low-income countries and lower and middle-income country governments. So firstly, I think donors need to respond in this short term and with immediate actions, because the needs are so critical. While doing that, we also need to keep a medium to long-term perspective in strengthening capacity and developing systems and structures that are sustainable. Secondly, which I think maybe is the most complicated one, is that we need to be fully aware of, and we need to be proactive in relation to the fact of the complexity of increasing tax revenues. So increasing tax revenues and domestic resource mobilization is, of course, about tax policy, it's about tax structures, it's about tax administration capacity, and this is very important. But it's also, of course, about the growth rates and the structure of the economy. It was already mentioned, the rates of formal and informal economy, and we know that in many low-income countries, we have informal economies up to 90% of the labor force being active in the informal economy. Now, one can also look at this and tackle it in different ways, but it needs to be seen. Also connected to increased tax revenue, and part of this complexity is government transparency and accountability, supporting or undermining the social contract, and hence the willingness to pay tax or not. And then thirdly, that we should also effectively use new opportunities. So while the situation is critical right now, it also brings increased attention to both tax and spending and social spending, such as social protection. And this increased awareness and focus also brings opportunities of increased support and strengthened incentives for change that we should all try to use. Regarding number one, on the immediate actions and the need to expand social protection, we know that with the current development and the developments since the pandemic, the need to expand social protection has really increased, and it has increased the awareness of this. The number of people being in a vulnerable situation and or in poverty is increasing due to climate change, the pandemic, economic downturn, conflict, increasing in inequality, etc. And then, of course, at the same time, we know that domestic revenues are not enough to cover these needs. So in the immediate to short term, we need to be ready to step in with support for building social protection systems and expanding them. And I think, many of us donors are already. This is one of the areas where Swedish Development Corporation has increased the most the last 10 years. And I hope we can continue on that. And I can see other donors joining as well. But at the same time, as we do support directly the developments also of social protection systems, we also need to combine this with medium-term financing frameworks, with the outlook of increasing the domestic financing. And then also together with support to gradually strengthen capacity to generate sufficient own resources. So it should be like a package of support and interventions. And there are some good examples, I think, where this development has gone relatively fast, and one can see it in Uganda and one can see it in Kenya. And then one can see some other developments like in Tanzania, where I have worked myself, where you have a fantastic social protection system. It's supported by the government, but it remains almost 100% funded by external resources. So one need to, at the same time, have a gradual expectation on how to move to domestic financing. And then combining this immediate to short term with the medium to long term perspective on strengthening the tax administration capacity. It has already been mentioned several times by the panelists of the importance of this. What I want to mention on capacity for tax administration is also the importance of having like a holistic view of what is capacity and what is it that increases tax revenues. The Swedish tax agency is working a lot together with SIDA and in several low-income and lower middle-income countries, for example, with the Kenya Revenue Authority. And their approach in this peer-to-peer programs on capacity building for tax administration is very much on simplifying tax compliance and also on viewing the taxpayer as a customer to serve. You know, this is what they've done in Sweden, where they have made it so easy to pay tax that none of us can avoid it. And also they are the most liked authority in Sweden, actually. But to see that change in kind of approach is really interesting. On the number two, on the complexity of increasing tax revenues and seeing this whole package of the direct tax interventions, but also other interventions, working more with job-rich recovery, expansion of social protection, etc. There are two concrete examples that I want to mention. One is the Global Accelerator on Jobs and Social Protection, which aims to support employment and social protection policies and national financing frameworks for the creation of hundreds of millions of decent jobs, as well as large expansion of social protection. And what I want to say is that it's important to have the direct tax administration related support in combination with these other types of support in order to support an economic development that you can actually tax, and also to support in a responsible way this transformation from the informal to the formal. The second concrete example that I want to mention is the OECD Global Forum on Transparency and Exchange of Information for Tax Purposes, which is really important on the global transparency and exchange of information standards around the world. And this, of course, supports accountability and transparency for increased tax revenues. And SIDA is happy to soon launch its financial support to the Global Forum. On accountability and transparency, it can also be important to support other key institutions like the Auditor General that can play an important role. Regarding the number three on new opportunities, and this has been mentioned now several times, and I'm really happy to hear that, is I wanted to mention also two specific areas. One is the two-pillar solution, which I think almost everybody have mentioned now, which is really a breakthrough on a change when it comes to the conditions for tax evasion and tax exemption. I think that for many of us working on with lower income countries, etc., it's really frustrating to see the way that the extent of tax evasion and also the way that one uses tax exemption. And I really hope that this two-pillar solution now can bring, you know, a new framework for real change. But in that, of course, we as donors need to support countries to be able to implement this at the country level. And the other one that I wanted to mention that has also been mentioned is digitalization, which of course it brings its different types of risks, but there are a lot of huge opportunities also in digitalization for making gains in effectiveness and efficiency on tax administration. So in this case, I mean, the role of donors is to assist in accelerating the use of digital opportunities while managing the risks. So in summary, these are some proposals on how the role of donors can evolve in the coming years with 3 themes. 1, to respond to the immediate and short-term increasing needs with the medium to long-term perspective on capacity development. To look at clusters of support to address the full spectrum of complexity of tax revenues. And 3rd, to assist countries in using new opportunities to accelerate the effects on tax revenues, as well as coverage of social protection. So thank you very much.
Thank you very much. Truly a lot to unpack there as well. Some very innovative, I think, ideas. The whole idea of a package, the short-term approach, the medium-term approach, and the long-term approach of capacity building, which I think has resonated throughout this entire discussion. And of course, the important role that donors will have to play in sustainable development, while at the same time building capacities within countries so that they can carry out their own domestic resource mobilization, and to look at it from your perspective as a kind of step approach and just building as we go along. So thank you very much for that insight. And so finally, Samira, so ATAF is now an established actor in the tax landscape in Africa. What does the next decade hold for both ATAF and Africa more generally?
Thank you, Chair, and good day to all. Thank you to the OECD for having me on this platform. It is really a pleasure to be part of this esteemed panel, and I am really excited to share with you ATAF's plans for the next decade aimed at increasing domestic resource mobilization in Africa. ATAF's niche is the ability to effectively serve the needs of its members, which entails consolidating the gains of the last decade, whilst being able to anticipate new issues, being able to conduct an in-depth diagnosis of the needs of its members, and its agility in responding to the various technical needs of its members. Tax and revenue growth in Africa is derived from domestic resource mobilization. The next decade involves ATAF focusing on value adds to our 42 member countries, and this encompasses the development of 3 new capabilities, namely tax policy, customs and trades, and the regionalization of ATAF's activities, while still enhancing the 4 existing capabilities being tax administration, standard setting, and data analysis and statistics. So in terms of tax policy, we are looking at implementing a supply-driven approach to tax policy, both international and domestic taxes, especially through cooperation and partnership with the African Union. In terms of customs and trade issues, as you know, approximately 60% of our members have tax administrations that have combined customs operations. And of course, the importance for the continent of the incoming continental free trade area and the impact on member countries' revenues. Then in terms of regionalization, to become a continental organization by bringing ATAF to the various regions and leveraging on enhanced synergies within economic blocks, and developing a regional pathway to gain a deeper understanding of member needs and to have a greater impact on the ground. In terms of enhancing the existing capabilities, we are looking at digitalization. ATAF's strategic focus on tax administration will be to enhance its capabilities in the digital and human spheres. Conducting data-driven research and applied statistics. This will enhance tax policy work to provide members with accuracy in policy determination and advice. And then, of course, the standard settings, where we will focus on a common African perspective and consensus on approaches in tax policy and tax administration. Additionally, within the areas of the ATAF New Decade, we will be focusing on the standard setting work in the global tax rules. ATAF has put forward several positions and written comments to the OECD on simplification measures, both for Pillar 1 and Pillar 2. Notable is the ATAF work on the Amount A and the current ongoing work on the design of Amount B, where Amount A, ATAF called for the exclusion of all of the profits of the extractives groups, and in Amount B, ATAF has called for Amount B to have a broad scope and to include sales agents and commissioner arrangements. Pillar 2 rules, where currently ATAF has developed the suggested approach on domestic minimum top-up tax to collect the additional top-up tax based on the new rules. ATAF also in the new decade will continue to develop suggested approaches to toolkits, guides, and policy briefs, giving countries options to consider when making tax policy decisions. Coupled with the African tax outlook, these toolkits have been effective in assisting countries by providing African solutions for complex commercial transactions. These results are best illustrated in Zambia, where ATAF worked with the Zambia Revenue Authority and the Ministry of Finance and Economic Planning to make changes to Section 97A of the Income Tax Act. Zambia has reported that the number of mining companies paying corporate income tax increased from 3 to 11 between 2016 and 2021. The tax paid increased from 844 million kwacha in 2014 to 4.6 billion kwacha in 2020, which is nearly a 550% increase. ATAF has developed the following toolkits to assist countries with tax administration, compliance, and risk management processes, being the VAT Toolkit in partnership with the OECD and the World Bank, the EOI Exchange of Information Toolkit on setting up an Exchange of Information unit in partnership with the Global Forum, and the suggested approach to tax audit preparation and execution. Our work in the OECD standard setting process has resulted in the development of the ATAF suggested approach on domestic minimum top-up tax aimed at protecting the African tax bases. In the new decade of our existence, we will be placing particular attention and importance on the qualified domestic minimum top-up tax. This includes having several policy briefs for ministers, suggested approaches, and technical workshops. The aim of this is to, noting that there are not too many African-headed multinational entities meeting the Euro 750 million threshold, allow African countries to protect their tax bases from the income of tax incentives being taxed in the home of the parent entity. It will also allow African countries to top up the tax rate of these incentive transactions to up to 15%. Other areas of focus is providing technical support and guidance to our membership on implementation of environmental taxes, health taxes, as well as property taxation. Additionally, in terms of regional cooperation, ATAF is increasing its regional cooperation by partnering with the African Union, the African Development Bank, and the high-level panel on countering illicit financial flows. This is very important in developing the necessary tools that apply to the membership's needs. Additionally, increasing the collaboration with regional organizations such as WATAF and CREDAF through peer exchanges and technical assistance programs to African countries, which has been found to be beneficial for tax administration. ATAF as well in the new decade will set up the ATAF desk at the African Union Commission that will provide technical support on tax-related matters to the AU's Specialized Technical Committee and the STC, the Subcommittee on Tax. The benefits of this include access to key decision makers on tax policy, fast-tracking recommendations on combating illicit financial flows, and political buy-in on tax matters whilst enhancing Africa's voice on the global tax reforms. I thank you for your attention. Back to you, Chair.
And I thank you very much, Mira, for providing us with that very exciting insight for the next 10 years of ATAF. Just the intention to add value, the value added to the 42 members, a supply-driven approach, the focus on customs and trade, enhancing synergies, working with other multilaterals, and of course, to say thanks to ATAF for their input in the two-pillar solution and the work that has been done in relation to the standard setting on both amount A and amount B. And also, I have to give a shout out to Zambia through ATAF on that astounding increase in revenue collection. Certainly from my own standpoint as a developing country, feeling very inspired that with the right capacity and the right technology, that we too can achieve increase in revenues from transfer pricing initiatives and so on. And so thank you so very much for your insight. I think we're running behind time, and I will just open the floor for any questions at this point.
Marlene, there's a couple of questions in the chat.
Okay.
That's how we're
okay.
So I think there's a question to Chetan on pillar one.
Okay. All right. Let me see if I'm seeing. Okay. Here we go. Here we go. All right. I can see questions in the chat. Somebody's asking if I can see the questions in the chat. So we have quite a lot of questions. I don't know if we'll be able to go through all of them, but I'm very excited about that because it means that people were really listening and very excited about this session. Okay. There's something in Spanish. Just give me a moment, please. Give me a moment as I try to. Okay. All right. So Chetan.
Yeah, Marlene, I can come in. I thought it would be more efficient to write my answer in the chat itself. So I mentioned in the chat because I knew you were running behind time. Okay. So for the efficiency's sake, I've replied in the chat itself so that you can take up other questions.
Other questions, yeah. Okay. Yeah, all right. But just to let for others who Chetan replied to what are India's plans for pillar 1 and pillar 2. And so you can go to the chat to see his written response there. Okay, Stephanie Song. I think Stephanie is the person who spoke to Chetan. That was a question you responded to, Chetan. Okay. I'm sorry. Okay. Do we have? There's a question here. Do we have a sense of target dates and audiences for this summit? I believe that this is to Ambassador Monchelon. Target dates and audiences for this summit. Somebody's asking a question about that.
Yes, so the summit has been announced at the Sharm el-Sheikh COP27 by President Macron after Mia Motley call for more funding for loss and damage and more funding for adaptation and mitigation. It has been then confirmed at the G20 in Bali. There are 4 objectives in the summit. The beginning of the diagnosis is what I shared. ODA in the world is currently at the highest level, but we know that the investment gap both for development and climate is huge. So we need to have a financial system and financial institutions which are more fit for the challenge we have in front of us in many countries, both for development and climate, and without opposing the two issues or two challenges, without opposing emerging countries and least developed countries, and without opposing North and South, because we're not going anywhere when we talk about global commons and on which we oppose. So the four objectives of the summit, which will be a leaders or heads of state summit, and which is being prepared by many stakeholders linked to the G20, linked to the G7, linked to the COP28, is one, to speak about the global financial architecture. How do we have the World Bank, the multilateral development banks, the IMF, the Bretton Woods system to include better climate, and also to be more effective on the debt issue as a moment where we know that 60 to 70 countries are on the edge of defaulting. So that's objective number one. Objective number two is to recognize that there is no funding solution without private capital and private savings. So how do we de-risk projects so as we make sure that we can do an effective blended finance? So having public money plus private money to fund infrastructure, infrastructure for energy, for water, for mobility, for education, for health, in ways where private capital can go to places and projects where it's not going today. The third objective is to have a focus on infrastructure. How do we originate more projects? How do we become more able to fund smaller projects? And the fourth aspect, which is very linked to the discussion we're having today, is what are the new sources of funding? And the new sources of funding cannot, and I repeat this, only be external. This is why domestic resource mobilization is so essential. Again, I give you the number for Nigeria. 5% of GDP of tax and non-tax resources for the country. Latin America is 22% on average. OECD countries are at 34%. So we cannot sustain a system where only foreign currency external providers fund development. We have to keep up with the ODA. We have to keep up with the climate finance. We have to keep up with the commitments made at the COP15 for biodiversity. That's no discussion, no debate on this. But we will not manage to achieve our goals for development and climate and the global common goods and public goods we all know if we don't have more domestic resource mobilization. And therefore, the work of the OECD, of the tax inspectors without borders, of everything we discussed was so essential, because if we want to reform Bretton Woods, which we aim at doing, we also need to have more funding coming from the countries where we aim at developing projects.
Okay, thank you very much. We have another question from Nicholas. To what extent can we increase taxes? Do we have studies discussing the optimum levels without experiencing tax fatigue and reduced morale? And I think I'm going to ask you to respond to that. If you want me to repeat it, to what extent can we increase taxes? Do we have studies discussing the optimum levels without experiencing tax fatigue and reduced morale?
Sorry, did you send the question to me?
Yes, I'm asking.
Yeah, that's
right.
fine. That's fine. Thank you. Thank you. I've seen the question. Yeah, that's a really good question. I think, and that's a delicate one. And I'm not sure, maybe others know whether there are specific studies discussing the optimum levels. But I mean, one important thing in the balance of tax levels is, of course, the social contract. So what is the trust in the government, and what is the expectation on the government from the taxpayers on getting public services back from the tax payments? So that is one of the critical parts in order for it to be sustainable. And for that to be sustainable, you need to have some level of accountability and transparency in place. But this will also be a very critical question for these countries with very large informal sector, and how you move in order not to create too much negative consequences for the vulnerable people that are normally in the informal sector, and how you transform into more of a formal. But the social contract and the accountability and transparency, I believe, is also at the core of what kind of tax level you can have. But I'm sure there are other panelists that can also add on this question. Okay, and well, I'm going to ask each of the panelists to give a 30-second closing remarks. So if you want to add to what Trude has said, you can do that. There are some other questions that are coming in, and I think we'll just take these last two. One is for you, Grace, so you're not on the panel, but you're being asked by Jose Dalindez. He has a question with the implementation of Pillar 2. Is this the end of tax incentives?
Okay, thank you, Marlene. And don't want to take time away from the other panelists, but maybe first, before I answer that, I would like to say something on the previous question about, is there some optimal tax rate or tax mix? And I'm sure there are studies on this, but I think fundamentally the answer is no, because it depends on the specific circumstances of each country. And so we know that, for example, the Nordic countries have some of the highest rates of tax, but they also have very high rates of tax morale. So I think it does depend on the specific circumstances of the particular country. Also, you know, are they resource rich? What is their economy like? What we do know is that countries need to generally generate at least 15% of GDP in order to provide the basic minimum services to their citizens. And so I think that's a benchmark, but what types of taxes, what is the mix, et cetera, I think does depend on the particular circumstances of the country. Now, let me turn to Jose's question. No, this is not the end of tax incentives. It is not. However, there are limitations as a result of Pillar 2 to tax incentives. And so we've done a report that you may have seen precisely on this topic of what does Pillar 2 mean for tax incentives. The key is what we want for countries to have is to have when they are trying to attract activities to their country, there should be substance. So we have a substance carve out in the Pillar 2, but I think all countries will need to look at the tax incentives they have to see how they mesh with Pillar 2. But we certainly thought that Pillar 2 provided a great opportunity, in particular to developing countries, but not only developing countries, to review and get rid of some tax incentives, because we've heard so many times from developing countries that they feel pressure from business to offer certain incentives. And the incentives are often wasteful in the sense that that investment would have occurred anyway. So not the end of tax incentives, but we are trying to rein them in.
Okay, thank you very much, Grace. And I'm going to ask the panelists to just for just 1 minute to just give us your closing remarks, your takeaway from this, and you can either reflect on the issue of tax fatigue and tax morale, which I think is an issue that is of concern. And also, if you wish, you can also reflect on whether you think tax is too niche a subject in most countries. Do we need to get more citizens engaged in tax? So you can share your general thoughts, or you can reflect on either of those issues, which I think are really, really important issues to consider as well. So 1 minute starting with you, Shetan.
Yeah, thank you, Marlene. That's a very relevant question. And I believe that tax morale is a very important aspect of the whole tax policy. And especially when I look at my country, India, I see that voluntary compliance is is the keystone of the whole tax administration, and we are quite focused on it. And I believe that there has to be a lot of initiatives that have to be taken by the tax administration to build this tax morale. But at the same time, I would see that this tax morale is a two-way street. So you need the taxpayers also to come up, but at the same time, you also need incentives. So that's what I feel about it. And just one closing remark I would like to make, because you asked me a question about the G20, I'd just like to say that in the coming months, whatever we have discussed here, whatever the esteemed panelists have viewed, it will be discussed a lot in the coming months in the various meetings that are being held under the G20. And we all have to collectively work to ensure that the development of the global tax architecture, especially with Pillar 1, Pillar 2 work and more work that will go ahead, is fair, inclusive, sustainable, and has ample opportunities for developing countries to express what their needs are. Thank you very much.
Thank you, Shaitan, for that reassurance. Alessandro, your final thoughts.
Thank you. Well, I would just like to highlight how important it is to remember that we can't see taxation as separate from governance, from polarization, and from political unrest. What we need to understand is that taxation is a way of making the system more fair, and that will definitely have a positive impact in the way in which people see democracy and how democracy really can deliver what it is meant to deliver, which is a better situation of life for all. So I would say taxation should not be out of the sort of public conversation, because it is key to the public conversation on fairness and how people perceive the system. It should be, and tax morale will derive from that idea that taxing, progressive taxing is fair and is what is needed to make people's lives better. Thank you.
Thank you very much. Thank you very much. Ambassador Monchelon, what are your thoughts?
So my thoughts is that we both need a high commitment from the most developed countries to keep up with their, global engagement to fund global goods, and local commitment from the emerging and also less developed countries, which are, growingly developed, to make sure that they can extract the value themselves from the goods which are produced in their own countries. Again, the number, out of $100 of value of oil, African countries at the moment only keep 22% on their national tax resources. So it means that there is, in a form, predation. And tax is a way to prevent predation, because we can invent all the systems globally to have then 15% of minimum tax at the other end of the planet. The best way is to tax at the source, where the thing is being produced, extracted, and where the value is also very urgent to be then invested for the country, for development, and for climate. So I really urge everybody to read the OECD tax report on Africa and the OECD work on illegal funding or illegal economic activity, because I think they're commending urgent and collective action. So I really thank Grace Navarro for the team works she's pushing, and for the leadership the OECD is having on these issues for many, many years now. Thank you very much for the panel.
Thank you very much, Ambassador. Trey?
Thank you. Thanks. Thoughts? Yeah, I think it's great to hear the commitment from the G20, and also we're looking forward to the forum that France is going to organize. I think that the whole discussion, and also ending with the tax morale, shows the importance of seeing this as a complex system. Mm-hmm. If we want to increase tax revenues, if we want to increase domestic resource mobilization, we have to think about the governance part, the transparency, the accountability, linking into the social contract, the tax morale, etc. And then the economic transition, what kind of growth is being supported? How do we move to more of formal economy from informal, etc. So I think that's really important for us if we start to commit even more into this area, that we have this complex picture with us. Thank you.
Thank you very much. And Samira, your final thoughts.
Thank you very much, Chair. I think, when looking at increasing taxation, it should always be looked at in terms of it shouldn't be to the detriment of the poor, especially in the African perspective. And then in terms of tax morale, what we see in Africa generally is that tax morale can only increase when citizens actually see the benefit of paying their taxes and what they get for it. The changes in the global tax system will allow Africa to intensify its efforts to combat illicit financial flows while collecting additional revenues through the Pillar 1 and Pillar 2 rules. And to this end, ATAF will continue developing tools to assist members in collecting their revenues. Thank you very much.
Thank you very much, Samira. And it was my honor and pleasure to have moderated this panel. I could go on listening to you, your presentation and your ideas, but I also want to thank the audience who stayed with us. And if you look in the chat, colleagues, you will see where your fellow participants have posted some worthy interventions as well. And there is also information on where you can find reports by the OECD on tax morale and other other publications as well. I will now hand over to Grace for to close out what has been, I think, an excellent 2 days of tax and development sessions.
Thank you, Marlene, and thank you everyone for joining us for these 2 days of discussion on tax and development. These tax and development days are one of my favorite events because it really engages everyone in all the different elements of our work to support countries in improving their tax systems. I think it's essential. I really hope that with this knowledge, all of you will take advantage of everything that we have to offer. I know that there were people who were not able to see all of the sessions. Certainly I wasn't. And so the good news is that we will make the recordings of the sessions available in the coming days on our website. So if you enjoyed these sessions and know people who might find them interesting, please do share the website so that they can benefit from the discussions that have been held over the last 2 days. Just to highlight the importance of using the tools, we're working on all of these different things that you've heard of over the last 2 days. Please make sure you avail yourselves of these tools that we are providing. We're doing a lot of really exciting things. Just for example, yesterday we launched the toolkit for VAT on e-commerce in Africa, which we developed jointly with ATAF and other partners. This is incredibly useful in terms of getting the rules in place to be able to collect tax on all of the e-commerce that is happening in your country. So please make use of these and the other elements of our global relations program, because we are doing this really for the benefit of developing countries. Now, this last panel was really interesting and I think highlighted that there's a lot more to be done. This is not just about what has already been done, but really looking forward. And so with ATAF's 10-year strategy and the other issues that were raised, there is still a lot more to do. And for that, we don't do it alone. And so let me thank all of our partners, many of whom were featured in the different sessions, for their cooperation, their collaboration, and really contributing to all of our work, which would not have as much impact if we didn't have these partnerships. Now, I have to say, and it's becoming reality time, this may be the last time I get to speak to some of you before I step down as director at the end of March. But I do want to highlight that over my 25 years at the OECD, I have seen dramatic changes in how we work with developing countries, how we carry out our capacity building and outreach. And it's gone from a few training courses that we did on tax treaties, transfer pricing in Eastern Europe, to a full range of activities, but also of products like the VAT toolkit, really practical tools. So not just, a course on here's how treaties work, here's how they allocate taxing rights, but really tools that help people on the ground. So toolkits, the Tax Inspectors Without Borders, all of these things have been, I think, really transformational changes in how we engage with developing countries. Tax Inspectors Without Borders, which I'm sure you've heard a lot about, is a whole other new approach that is very different, much more hands-on, much more demand-driven from the countries that we work with. And I think this has been extraordinary. And of course, one of the key parts of all of this transformation has been bringing Marlene into the inclusive framework as a co-chair, where she sits front and center, reminding us constantly of the important needs of developing countries and that these need to be taken into account. It's a lot of work for Marlene, so I want to thank her before I close this. But really, thank you everyone for contributing and participating in this. We really appreciate it. And well, we, the global we of OECD, CTP, will see you next year.
Thank you very much, Grace. I will save my tears for the end of March. Thank you so very much. It's really been an absolute pleasure. And thank you again, all. I don't know if Ben would like or is.
No, I think we're done, Marlene. Thank you to you and to all the panelists and to everybody who's contributed to these last 2 days. Thank you.
Okay, thank you very much, and bye, everyone.